Gold in fiat US dollars is at last seemingly breaking out to new all-time nominal fiat price high levels. Yet no, seemingly near no one cares yet. Unless you're a focused bullion stacker like ourselves, you probably wouldn't even know this. For in the very wealthy on paper Western world, most are still gold trapped, clinging to historically overvalued asset classes like stocks, the S&P 500, or they're plowing hopium record high mortgage payments into yet another unaffordable US real estate bubble. This here is a chart illustrating the common financial bubble formation, citing the human psychological stages that investors typically must run through, starting from left for dead undervaluations on the far left to the eventual building secular bull market that often ends in overvaluation bubbles. US stocks and US real estate are both in the common bull trap position at the moment. As for silver and gold, I pretty much stopped showing this out-of-date chart because the creator of it, Nick Lard at Gold Charts RS website, likely made it in the early 2010s. And the timescales and potential eventual fiat price points are out of whack and typically just confuse onlookers. This fiat financialized world of overwhelming derivative power in the short and medium terms has retarded the inevitability of what is coming. An eventual mania phase for gold first and silver likely to follow. Typically by now, the bought and paid for fiat financialized media might have given gold a few mentions of hype. But I looked this week, and here are just a few cuts that can clue an onlooker in on what bullion is building quietly.
But let me show you what central banks have been doing. Going back to 2010, this shows you how many tons they've been buying each year. This is last year. This was 2022, and that was that horrible year for the markets. That's when we saw interest rates shooting up. Nevertheless, central banks wanted to own gold, and I think that says a lot about the yellow metal. You'll notice that this line, this bar for 2023 is a bit shorter than this one. This is only through the third quarter, so this could very well conceivably add considerable height to this into the end of the year. We'll see if we can eclipse that 1,000 ton mark.
We would basically say with gold, you figure out how much you need to be properly diversified in your eyes. You wait for periods where it's reasonably priced, and over the next 3, 5, 10 years or so, you would expect it to be higher.
Of sluggish economic recovery in China, that country's affluent are sending some money overseas, according to a New York Times story today. Chinese families spending on everything from gold bars to very high-priced apartments in Tokyo.
The other trend that's interesting, you'd mentioned the gold bars, and this is something that we've been tracking for a couple of weeks now, is young Chinese, like Gen Z, that are much more interested in buying gold. And so what they're doing is that they're buying about $50 to $80 worth of gold, and that's usually in the form of a gold bean or a koi fish or something else. That sometimes it's jewelry as well, because they see this as a way to save for their future and something that's manageable. Chinese have traditionally loved gold, but this is something that we're seeing much more. And it's interesting because it's among young Chinese, which when I think of gold, it's usually been kind of the older set that's been interested, but now you're starting to see a bit of a change.
You know, Eunice, it's great to see you. I know we get to see you later this week, which is really terrific. I want to talk about the Executive Order 6102, which was FDR at May 1 of 1933, where he confiscated your gold. You're an American. You had to give your gold to the government.
Half truism, Kramer. You see, the U.S. government in 1933 decided to break the sanctity of private contracts under the guise of national security and attempted to tell the U.S. citizenry to turn in their gold coinage to branches of the now Fiat Federal Reserve. But according to U.S. Mint coin striking data, all the way to the year 1932, versus what they received after trying to nationalize the public's gold savings by 1934 and 1935, well, it turns out about 3/4 of the gold coins outstanding at the time were never turned in. Pretty sure no one went to prison for ignoring that unconstitutional edict by fiat decree either. You can learn more about that original sin in U.S. financial history by simply searching here for what is now one of our most viewed YouTube videos entitled, How Much Gold Was Confiscated in 1933? Truly, the gold confiscation fear card and manipulation tactic is both hyperbolic and played out.
I find it hard to believe that the PRC is letting this happen when FDR wouldn't let it happen.
Again, nearly 3/4 of our U.S. forefathers ignored FDR and his fraudulent edict and simply kept their gold coin savings for their long hauls.
Well, I think that the PRC would definitely want to make sure that there isn't this huge outflow of money. So we have seen that with capital controls or other ways in which they would crack down on illegal, say, money changers, for example. But in terms of the gold, it's something relatively new, and it's not necessarily something that we're seeing this huge outflow of in terms of like real nuts and bolts of people suddenly opening up their luggage and then there's tons of gold in there. But one of the benefits of that I've heard too of investing in gold is that you could take those little beans and like the jewelry and just kind of sprinkle it around in your luggage and then head out. And now that Chinese can travel much more, it's seen as a more palatable way to invest.
I wonder if Costco's gold bars now you can buy. I wonder if they have Chinese Costco's.
Now let's turn to India for some more savvy gold market coverage from this week. The final point she's going to make after nearly a decade of price rigging will likely make you ironically sick to your stomach as well.
Thank you for that, Surbhi. Well, yes, we're trading at a 7-month highs and we have managed to keep above $2,030 an ounce when it comes to the global gold prices here. It has been this week itself that we have seen an all-time high in gold prices in the Indian markets. So when you look at the month of November, the gain has been to the tune of nearly 3%, and this is after 7% of gains in the month of October as well. So it's a second monthly gain that we've seen in case of gold prices, and the month of December has started on a positive note as well. Well, there are expectations of a US rate cut in the first half of 2024 itself. So when you look at the CME Fed Watch tool, there is a 50% chance of a rate cut in March 2024 and a huge 80% probability of a rate cut in the month of May 2024. And that clearly has been supportive. The focus clearly on the Powell testimony today in the evening. Further direction would come in from that. The weakness in US dollar index also has been supportive. And then there's a very interesting report from JP Morgan which says that the only thing that they believe there is a structural bull run within commodities is in case of gold and silver, and that they are advocating their clients to continue to accumulate.
Even with record-breaking central bank gold bullion buying the last few years, and gold prices in nominal fiat currency terms hitting record highs in nearly all the more than 150 fiat currencies around the world, Western financial advisors still have near no allocation, even to underperforming unsecured ETF slush piles. Central banks in all but the Russian Federation have so flagrantly abused and blown out their ongoing fiat currency supplies that even a 40% coverage of the fiat M0 pile versus official gold holdings, the literal monetary base at present versus the official gold that the central banks collectively have, that would require a current gold spot price closer to $10,000 an ounce, and not this hologram suppressed $2,000 an ounce long-term support level we will likely be leaving behind in the coming years. Central banks, the collective abusers in charge of this full fiat currency world run amok, literally know this, and that's why they are now buying gold bullion reserves at rates never before seen in financial history. The combination of much higher gold prices in our future will make the coming trends toward a 40% coverage target more realistic as the mania phase comes to fruition. Let me quickly give you a few updates to the potential tsunami of capital inflows to gold and silver related that have all but not touched gold in even tiny portfolio allocations yet. Troubled commercial bank UBS published their latest 2023 Global Wealth Report illustrating how many massively wealthy estates there are in this fully fiat financialized world, much of which is of course on paper only. They report there are over 243,000 known estates in the world with over 50 million in fiat US dollar net worths, half of which reside in the United States of America. Those are the people who actually run the country. What percentage of them do you think have any exposure to physical bullion allocations? Probably looks something like this. Now let's look at some recent data covering some of the world's largest global public pensions. Of the surveys responding sovereign funds, 40% suffered losses last year. It makes sense as both global stock markets and bond markets performed disappointingly. The vast majority of these funds have no gold allocations yet. Of the survey's responding pension funds, 62% reported losses last year. I'd bet they have even less gold allocations than the former top 50 sovereign wealth funds do. Between all surveyed, 53% expect a global economic recession in the next 12 months. You know which asset class outperforms in recessions? That's right, gold, center stage. Turning to the still teetering micro-fractionally insured U.S. banking system, the latest update on unrealized losses on their books recently blew out again to near record levels. Surely they have growing hopium of a fiat Fed rate cut cycle sometime earlier the better next year, 2024, so that perhaps some of their longer duration unrealized bond losses might get shrunk down as the fiat Fed returns to exploding its balance sheet wider in the next infinite QE cycle to come. Well, stick around. After this break, we're going to get into a bit more silver-focused outlook on what this all means longer-term, big picture. Hello, this is James Anderson on behalf of SD Bullion. Smash the like button if you enjoy these bullion market updates. Subscribe to our channel here for weekly bullion market updates with exclusive bullion service offerings like this one.
Did you know that some people believe that red and green are the official Christmas colors? Crazy, right? So I'm leveling up my holiday decorating this year and raising awareness of silver, the true Christmas color. There are so many people that don't even know they're decorating all wrong. But never fear, Silver Steve is here to help.
You've all got your Christmas colors all wrong. It's not red, it's not green, just silver. Now give me an S!
But to reach people, it's not enough to just tell them about silver. You have to find creative ways to show them why silver is the true color of Christmas. I mean, I even offered to paint someone's car for them. There's been a little resistance. But thanks to SD Bullion's holiday collection offering some of the best silver of the season, raising silver awareness is easier than ever. Oops.
Hey, who's out there?
Well, time to go. The SD Bullion holiday collection. Get it before it's gone.
Get him, Brutus!
Good doggy, good doggy!
The spot silver and gold markets traded up and to the right this week. The spot silver price closed at $25.43 an ounce bid, getting through 26 an ounce and then back towards 30 an ounce and beyond. That's the next legs required for an eventual breakout. The spot gold price closed yesterday at the end of last month, November 2023, at a record price high on the chart, which means a lot to highly leveraged COMEX derivative momentum traders. And spot gold started this month with a run towards its all-time nominal fiat US dollar price high, which I believe spiked just over $2,080 an ounce intraday on May 3rd, 2023, back when my former bank, Pacific Western, was teetering on the edge of bankruptcy. The spot gold-silver ratio closed at 81, and the key technical level to keep an eye on for silver bulls, especially out there, is it breaching 75 at some point in the future. So yes, there are gold cynics and bears out there, and they're likely hoping for a rug pullback towards below 2,000 an ounce. But with rate cut gold bullishness beginning to foment, we're going to see if gold ever goes below 2,000 again. I think that's a question worth pondering. And there is a more simplified monthly close line for the 21st century gold price chart. You can see how it's breaking out with many years support behind it. And here's one for silver since its COVID bailout ramp started in early 2020. Now, the current deviation above the 200-day moving average for gold is not near anything historically spiky, suggesting there might be further support ahead to bust the 2,100 an ounce barrier. A similar story on the silver side regarding the 200-day moving average for silver. We're looking at it throughout this full fiat currency era. This chart basically suggests a run to 26 an ounces in the near term. Now, the wide base that silver has been building over the last few years suggests that when silver finally decides to play catch up against gold, and the move will likely be very strong, and that $30 an ounce threshold is going to get a run for its money. There's still a long, crazy road ahead for us bullion bulls, but we're going to end this week with a little piano concerto of the coming golden age breakout that the Western world is still sleeping upon. And as the recently passed bond trading billionaire Scott Menard warned us about in early 2020, silver is still half off its all-time nominal price high in many major fiat currencies, including the fiat US dollar. Now, I don't want to talk about silver being anywhere near a semblance of fair value until at least at 3 to 4 folds in fiat Japanese yen terms from here. In a bullion bull mania, gold leads, silver follows, and that is precisely how we're going to look ahead. That's all for me this week, and as always to you out there, take great care of yourselves and those you love. If you enjoyed this video, hit the like button and share it with those you love. Subscribe to our channel and hit that alert button so you know when we publish new bullion market updates.